So Bitcoin has continued on its way. It's continued its rally. You can really see what's notable. And when you really get a big acceleration up from basically going sideways, this is what happens. So it's a really key indicator of the situation of an asset. When you see these moving averages group together and collect themselves, I've got a Labrador and it collects all its legs. When it lays on the sofa, all its legs go together. It sort of collects them in a pile and all the paws are in the same place. And it looks a lot like this. Okay, this is your Labrador. But that occurs when you've got a very flat uptrend. Okay, so in other words, the market is slowly ascending. There's this minor bit in the background that is improving the strength for that asset. It's improving the reasons as to why people would take it long. And you get that reflected in your stock oscillator, okay, or your RSI. You get these small dips down here. Not every time your dip will take you back to the bottom, but it's very, very slow. It takes a long time, okay? And at this point, you're now well up, okay? And again, it becomes the case, similarly to gold, that people are going to start to say, wow, you know what? Perhaps I would rather liquidate my entries. You've got to remember that Bitcoin is a HVA, but coming off this flat uptrend, it's had this, it basically, the story is it's had this minor sentiment in the background saying, maybe we should buy this, maybe we shouldn't. And that's why it's very tentative. That's why it creeps up slowly like a staircase. But ultimately, when it does go up, you've gone from 27,000 to 41,000, $14,000 a move, which is an awful long way, 50% or something. It has taken you from October to now, which isn't an awful deal of time. It's actually sort of 1.5, 1.75 months. But like I said, people are going to say at some point, I've had enough of this, and they will dump it, they will take their gains. Now, they tend to do this at areas where you can see key price rejection previously, which is why I mention as well that these are ideal areas to take gains. So mainly, I would say what I'm saying at the moment is referring to people who had it long and are looking to exit. It is absolutely the case, don't get me wrong, that it could do this. But the problem with that is you don't know that is going to happen. Okay, you don't know it's going to happen. It could. So you are taking a gamble. If you take the money today, you've got it. You put it in the bank and you continue and you keep going. It's much more preferable, in my opinion. You can gamble and gamble and gamble your whole life, and you'll find the more you gamble, the more you lose, unless you've got a concrete edge. So that's why I advise lots of my members to take the money. If it's on the table, take it, trade again. Take it, trade again. Because you can't really lose money if you're continuously taking profit and bulking up your equity. Okay, as long as you're not over leveraging, of course, and you do have an edge, and you're probable, you're taking a probable approach, you're buying low and selling high. There's no need to leave the gains on the table all the time because you simply don't know how far it's going to go. And it was the same up here. A lot of people would have left their profits on the table up there at a new high, at the highest ever price it's been. They left it. Okay, so that's not really a good idea in my opinion, is you don't know how far it's going to go in one swoop. Okay, all of this is open to interpretation. It's open to question. Okay, but over here, it's not. Down here, it's certified. All right, this point is guaranteed because you're taking the money today. That point is not guaranteed because you don't know how far it's going to go. Okay, now I understand that you may make more money if it gets to that point, but if you just took the money today, why don't you just rebuy lower? Why don't you just rebuy if and when you get to 33,000? If you don't get there, you've lost nothing. You've kept the money. Okay, so it's all about protecting your capital and maintaining the profits you've got. Because if you continuously do that, you're making it far more hard to be liquidated. You can see there's rejection there as well. So you've got some really key support. You're right back at your moving averages, and you know price always returns in practically all cases back to those key moving averages. They serve essentially as magnets for price, and they pull the price back in. So you know at some point that's likely. It's inevitable, more or less. Okay, so at some point in the future, Bitcoin is going to fall to some degree. You just don't know when. So you can do it at time, you can take your profits at times when perhaps it's considerably more likely on the basis of things, on looking back in history, that would occur. At the end of the day, trading is just probabilities. And anyone investing in Bitcoin is a believer. There's someone who thinks, I think Bitcoin has a future, so I'm going to hold. Now, that's fine, but that is a fictional assumption. You don't know that is the case. But like I said, you know that if you take profits today, you've made money, and a considerable amount of it. There's nothing embarrassing about taking a 50% profit. But like I said, I think eventually you may get back down here, possibly. If you're someone who's interested in shorting Bitcoin, I would say it comes with the caveat of doing it extremely small, because like I said with gold and many other assets, if you're going to pretend that this is the be all and end all, you are terribly mistaken. Because if you end up getting up here, it's going to hurt. It's going to be very painful. Okay. But it's not impossible by any means. And you saw that with this move. So anyone who says, oh, it is impossible, that's not the case. I mean, look what happened last time. Okay, comes all the way up there. It doesn't mean you should buy it. You should be buying it, really, when you get pullbacks like this. That is where the smart money buys, and the smart money sells at high prices. Okay, they buy low, they sell high. That is how cavemen made money, selling bones when there was dinosaurs. It's how knights made money in the medieval times, selling their homes. It has always been the case that if you buy low and sell high, you have a consistent basis to run with the natural economics of any market and thus make profit long term. This is considered a high price already because you have come up 50% in a row. It will be an even higher price at this point, okay, if you do get to 53,000 or thereabouts, but it is not the be all and end all. Like I said, that is not the end of the road. So if you're going to short it, be aware it's a HVA naturally. That means a high volatility asset. That means it can go higher. But I would say it's reasonable to say that people may start to liquidate their longs. You could even get a much smaller pullback that relies on just this candle wick before a move up. But the sentiment is there to the upside. If that does occur, I wouldn't be shocked. So any shorts, I would consider taking an earlier exit, because I don't think you're going to pile down all in one go. At least it doesn't look like that at this point. You would need a massive change in sentiment, a massive reason for people to completely dump Bitcoin out and say, look, we've had enough. So at this point, I would exit longs. I mean, my main basis on crypto, etc., is to exit longs. And the reason why, like I said, is because you've got so much on the table. This is where the idea of FOMO comes in. Okay, it's because when you think about the price going higher like this, and you think about making more money, you feel good. As a human, you feel very good about it. And this is why people teach trading psychology. Now, the way I get around FOMO is I say to myself the following, okay? And this is something I would consider noting it down, write it down, because it will save you so much money, so much time, and it will make an awful lot of sense, okay? The way I get around this is the idea, and I sort of made this up, it's the 10,000 trades basis, okay? So what I'm basically saying is over time, I'm going to be on the understanding that this trade, if I'm taking one on Bitcoin, it's not the only trade I'll ever make. I'm going to make 9,999 more trades in the future. So the fact that I'm excited, perhaps, about the price rising to one of these levels, it doesn't faze me, because I know if I take money today and I do it 10,000 times, I don't need to worry about the potential of the price going up, because I'll make money overall. Anyone who's getting FOMO and is worrying about simply a price move like this is of the understanding, or of the basis, that that is the only trade they're ever going to take, okay? And that's why they put everything into it, and that's why they lose their gains, because when the price falls up here and they don't take the money, okay, that's it. And where does FOMO end? Where does that end? When are you ever going to say enough is enough? And that's why people say, you know, oh, if you bought Bitcoin for $10, you'd be rich now. They would have sold it at $20. They would have sold it at $30. They would have sold it at $100. They might have even sold it for $12. Okay, imagine buying it at $10 or $1 and having $1,000, 1,000 times your money, and you wouldn't take it. And you know, it's just, It's just, it's just silly. But anyway, my method really is just going on this large spectrum of trades. I don't care if the price rockets higher. I don't care if it rockets lower. If I take the money continuously at value, at long side value, then I'll make money. It doesn't matter if it blows up. It doesn't matter if it goes down. Okay, it would if you're only taking one trade, ever. If you held on for FOMO gains and you never traded again, it would be fine. But next time you get FOMO, you lose everything you had. So just remember, this isn't going to be the only trade you take. And don't make it on that basis. Remember, you're going to take many trades in your career. Don't sweat over potential moves up. Just take the money and buy again. Take the money and buy again. Okay? Otherwise, you're risking everything. That is my bias on Bitcoin. Don't forget to get my free training underneath. I'm going to reprint this video.